Welcome to Lecture 5. Today, we'll take a closer look at the payment rails, the systems and networks that enable money to move between different parties during a transaction. Payment rails are the backbone of the payment process, ensuring that funds are transferred securely and efficiently, whether for domestic or cross-border transactions. By the end of this lecture, you'll understand what payment rails are and why they are essential to the payments industry. The key types of payment rails, including card networks, bank rails, and blockchain-based rails. How different payment rails function in moving money. The role of intermediaries in facilitating payments. The future of payment rails with the rise of real-time payments and decentralized systems. What are payment rails? In the simplest terms, payment rails refer to the infrastructure and networks that allow money to move from one account to another. Whether you're making a purchase at a store, transferring money to a friend, or paying bills online, payment rails ensure that your funds are transferred accurately and securely. Definition: payment rails are the systems, networks, and infrastructure that allow the electronic transfer of funds between two parties. These systems connect financial institutions, payment service providers, PSPs, and other intermediaries to process payments. Payment rails ensure that funds are authorized, cleared, and settled, allowing consumers and businesses to exchange money seamlessly. Key types of payment rails. There are various types of payment rails that facilitate different types of transactions, from domestic payments to cross-border transfers. Let's explore some of the most important ones. 1. Card networks, Visa, MasterCard, American Express. Card networks like Visa, MasterCard, and American Express are some of the most common payment rails used globally. When you make a purchase using a credit or debit card, the card network acts as the intermediary between the issuing bank, the bank that issued your card, and the acquiring bank, the merchant's bank. How it works. Transaction initiation. A cardholder swipes or taps their card at a point-of-sale terminal, initiating a payment. Authorization. The card network sends the payment request to the issuing bank for authorization. Settlement. If approved, the issuing bank transfers the funds to the acquiring bank, and the merchant receives the payment, less fees. Card networks are widely used for in-person and online purchases and provide fast, reliable, and secure payment processing. 2. Automated Clearinghouse, ACH. The ACH system is a payment rail used in the United States for direct bank transfers, including direct deposits, bill payments, and bank-to-bank transfers. ACH payments are often used for payroll, tax refunds, and recurring bill payments. How it works. Batch processing. ACH payments are processed in batches, typically at the end of the business day. Clearing and settlement. Funds are transferred between the sending and receiving banks through a clearinghouse. ACH payments usually take 1-3 business days to settle. ACH is known for being a low-cost option for domestic transfers, but it can be slower than other payment methods, especially for cross-border transactions. 3. Wire transfers, SWIFT, Fedwire, CHAPS. Wire transfers are used for fast, high-value, and often cross-border payments. Wire transfers can be processed through domestic systems like Fedwire, US, or CHAPS, UK, or through the SWIFT network for international payments. How it works. Real-time transfer. Wire transfers are typically processed in real time, meaning that funds are transferred quickly between the sending and receiving banks. Secure messaging. The SWIFT network provides a secure messaging system that connects financial institutions worldwide, facilitating cross-border payments. Wire transfers are reliable and secure, but they can be costly, with higher fees for international transactions. 4. Real-time payment systems, RTP, faster payments. With the rise of digital transactions, real-time payment systems are becoming more popular. These systems allow funds to be transferred instantly between banks, providing fast and efficient payments for both businesses and consumers. Examples. RTP US, the real-time payment system in the US, enables instant transfers between banks 24/7. Faster Payments, UK. The Faster Payment system allows real-time bank transfers within the UK, often used for person-to-person P2P payments and small business transactions. How it works. Instant processing. When a payment is initiated, funds are transferred immediately between the sender's and receiver's accounts, reducing the time required for settlement. 24/7 availability. real-time payment systems operate around the clock, allowing for transactions outside of traditional banking hours. These systems are transforming the way payments are made, reducing delays and making it easier for consumers and businesses to access funds quickly. 5. Blockchain and cryptocurrency rails. Blockchain technology has introduced a new type of payment rail, particularly with the rise of cryptocurrencies like Bitcoin, Ethereum, and stablecoins. Blockchain-based payment rails allow for decentralized and peer-to-peer transactions without the need for traditional banks or intermediaries. How it works. Distributed ledger. Blockchain payment rails operate on a distributed ledger where transactions are verified by a network of nodes, computers, and recorded in a tamper-proof blockchain. Decentralized payments. Payments made through blockchain rails do not require a central authority, such as a bank, to approve the transaction. Global and cross-border. Blockchain rails facilitate fast, low-cost cross-border payments, making them attractive for international transfers. While still in the early stages of adoption, blockchain payment rails have the potential to revolutionize traditional banking and payments by offering greater transparency, security, and efficiency. How payment rails move money. The movement of money across payment rails can be broken down into 3 key phases. 1. Authorization. During the authorization phase, the payer, for example the cardholder or account holder, initiates a payment, and the payment rail ensures that the funds are available. In the case of card payments, the issuing bank checks whether the cardholder has sufficient credit or funds, and approves or declines the transaction. 2. Clearing. Clearing refers to the exchange of payment information between the payers and payees' financial institutions. In this phase, the payment details are validated and the transfer of funds is prepared. Payment rails like ACH and SWIFT are commonly used for clearing transactions. 3. Settlement. Settlement is the final step in the payment process, where funds are transferred from the payer's account to the payee's account. For card transactions, the issuing bank transfers the money to the acquiring bank. For bank transfers, the funds move from one bank account to another. These phases ensure that money is moved securely and efficiently between different parties. Intermediaries and payment rails. While payment rails connect financial institutions directly, intermediaries often play a critical role in facilitating payments. These intermediaries help to bridge the gap between different systems, currencies, or geographic regions. Some common intermediaries include payment service providers, PSPs. PSPs like PayPal, Stripe, and Square offer payment solutions for businesses, allowing them to accept various payment methods, credit cards, digital wallets, etc., without directly interacting with banks or card networks. Payment processors. Payment processors handle the technical aspects of moving payment data between the merchant, the acquiring bank, and the issuing bank. They ensure that transactions are authorized and cleared securely. Currency conversion providers. In cross-border transactions, intermediaries like currency conversion providers facilitate the exchange of currencies, ensuring that payments are processed in the appropriate currency for each party. The future of payment rails. As technology advances, payment rails are evolving to meet the needs of a fast-paced global economy. Some trends shaping the future of payment rails include 1. Real-time payments. The demand for instant payments is driving the growth of real-time payment systems, allowing consumers and businesses to transfer funds instantly, 24/7. 2. Cross-border payment solutions. New technologies are emerging to make cross-border payments faster, cheaper, and more transparent. Blockchain-based payment rails and digital currencies like central bank digital currencies, CBDCs, are likely to play a key role in this transformation. 3. Decentralization. Blockchain and decentralized finance, DeFi, are challenging traditional payment rails by offering alternatives that operate without central authorities. These systems have the potential to reduce costs, increase transparency, and provide financial access to underserved populations. 4. Digital wallets and embedded payments. As digital wallets, for example, Apple Pay, Google Pay, and embedded payments become more popular, the lines between payment rails and user interfaces are blurring. These technologies offer seamless payment experiences, making transactions faster and more convenient. Key takeaways. Payment rails are the systems and networks that enable the transfer of money between parties, playing a critical role in the global payments ecosystem. Different types of payment rails, including card networks, ACH, wire transfers, real-time payment systems, and blockchain-based rails, each serve different purposes based on the nature of the transaction. Payment rails work through three phases: authorization, clearing, and settlement. Intermediaries like payment service providers, payment processors, and currency conversion providers facilitate transactions across different rails. The future of payment rails is being shaped by trends like real-time payments, blockchain technology, and cross-border innovations. Thanks for joining me, and see you next time.